I'm stuck in traffic right now, so I'm going to be telling you everything you need to know about buying $1 million home here in Canada. I'm talking income requirements, down payment requirements, credit requirements. We're going to go through the whole process of buying this $1 million home, and then we're going to look at the overall costs associated, the closing costs to buy this $1 million home, and then the expected costs to have it. You know, what are the ongoing monthly expenses to have this $1 million home, and so much more. So without further ado, let's get right into it. Let's talk about the income requirements, because the $1 million price point doesn't come with a small number. So now here in 2025, minimum down payment on $1 million property is actually only 7.5%. So you really only need to put $75,000 down. But with that being said, the mortgage will carry the mortgage default insurance. So to avoid the mortgage default insurance, you need to put 20% down. But minimum down payment is only $75,000. But with all of that being said, you'll carry about a $950,000 mortgage. Take off that $75,000 for the down payment, add back the mortgage default insurance, you'll be at around $950,000. So the income to support a $950,000 mortgage is going to be about $180,000 to $200,000, depending on your rate. And some factors that could also impact your income requirements might be a suite. If you have a suite in that property, that can increase your qualifying power by about $100,000. Another big factor to consider as well when we're talking about income requirements is that down payment amount. Now, when you put 20% down or more, you have a lot more flexibility, specifically in the qualifying ratios, because your file becomes conventional. Personally, I've gotten files approved up to 46, 47, 48 percentile debt servicing ratios on a mortgage once you have that conventional file. So in short, you really want to be bringing to the table about $160,000 to $200,000 in qualifying income when looking at that $1 million property. Of course, factors that'll impact this are how much you put down, you know, less than 20% down, insured file, or possibly 20% down or more, conventional. And if you have a suite, that suite is huge, especially depending on your location. At least $100,000 increase in your qualifying income. So keep that in mind. And I have to mention, when I'm talking about income requirements, qualifying income, it's not just specific to one person. One person doesn't have to make this amount of money. That can be a husband and a wife, that can be a brother and a sister, that can be 2 friends, it can be 4 or 5 different people. It just has to get to the minimum income requirements, and it doesn't have to come from one source. Now, let's talk about credit requirements, because a lot of Canadians think that your score has to be much higher than it really needs to be in order to get the best rate and qualify for $1 million mortgage. If you have a score above 680, you're in really good shape. There's also a pretty common misconception that your rate is going to change based on your credit score, and that's not necessarily true. Most A lenders actually have a minimum credit requirement of about 650. So 650 to 680, you're doing good. Above 680, you're great. And if you have a score above 720, you can't really get better than that in the eyes of a lender. Now, of course, a perfect credit score is 900, but you don't have to be so focused on getting it as high as you can. Just focus on making your payments on time, having a good history, and having good utilization, making sure that you're not using more than 30% of your allowable credit at any given time. Because in reality, the person that has a 680 score and a perfect score of 900 have the ability to get the exact same rate. Now, for those individuals that do have bruised credit or, you know, fall under that 650, sub 600 range, there is options available for you, but it wouldn't be in that prime lending space. But as a mortgage broker, that's what I specialize in. I've got every option under the sun, and alternative lenders are a really good solution as well. And here's a pro tip. When you're shopping for a house, don't go out there applying for a bunch of new credit, shopping around for a new car. You know, one hard credit pull will not drop your score. You don't have to worry about that, especially when it comes to doing your pre-approval, won't drop your score. But let's say you want to look at a personal loan, you want to look at getting a new car, you know, the car is going to send your application to a few different lenders and they're all going to pull credit too. That has the ability to drop your score. And also, every $400 a month that you incur in liabilities has the ability to reduce your buying power by to $60,000 to $80,000. So keep your debt as low as possible, especially if you want to maximize your qualifying. Now let's specifically talk about down payment and the structure behind that, because I mentioned it briefly. Minimum down payment for $1 million property is $75,000, but why is it $75,000? And how has it changed in the last few years? Great question. The down payment requirements on $1 million property are as follows: 5% of the first $500,000 and 10% of the difference up to $1.5 million. This has changed in the last couple of years. It used to be $1 million, and as soon as you hit that $1 million purchase price, the minimum down payment would go from 5% of the first $500,000, 10% of the difference, to just 20%. So in the last couple of years, the market has opened up drastically for first-time home buyers looking to get in and buy $1 million property with significantly less down payment. Before we jump into the process of buying a home from start to finish, let me tell you the expected costs associated with buying. The closing costs on top of the down payment. So of course, the largest cost of this transaction is going to be the down payment. You know, in the case of minimum, you're going to be looking at $75,000. But that's not the only cost associated with buying. There's going to be closing costs. The most common closing costs include things like property transfer tax, lawyer fees, home insurance, and an appraisal. And unfortunately, even if you're a first-time homebuyer, you're going to be bearing the full brunt of the property transfer tax bill on this purchase. And that's because it's over $860,000. The property transfer tax exemption only goes completely up to $835, and then there's a partial exemption between $835 and $860, but we're well above $860, so there's going to be no exemption for you. But with that being said, for property transfer tax, the calculation is 1% of the first $200,000, 2% of the remaining. So in this case, 1% of the first $200,000 is $2,000, and then 2% of the remaining $800K on the purchase price is going to be $16,000. $2,000 plus $16,000 gives you a property transfer tax bill of $18,000. That's going to be the largest closing cost next to, down payment. Next up, you're going to be looking at home insurance. Approximately, very approximate, there's so many factors that go into home insurance, but approximately home insurance on a single family detached home is going to be about $3,000 annually. And then you're going to have your lawyer fee. Lawyer fees are about $2,500, give or take what the lawyer has to register on title, and the overall complexity of the file, the instructions that the lender sends the lawyer. More registrations, more complexity could result in a slightly higher lawyer fee. And lastly, we've got an appraisal. Lenders are generally going to ask for an appraisal on a property of this value just so that they can confirm the value of the asset that they're securing the mortgage against. And when I say appraisal, I do mean a fully certified appraiser going out to your property and doing a full report based on, comparables in your area and values determined by the condition and a bunch of other variables. Now that we've got the value ironed out on the closing costs, what are the costs associated once you have the keys on a month-to-month basis? Another great question. I'm so happy to answer that for you. So on a month-to-month basis, some costs associated with having a house are going to be things like property taxes. You also can pay these on an annual basis, so you don't have to worry about the monthly. Utilities, heat, water, electricity, and an overall maintenance cost. Generally speaking, you want to reserve about 1% of the home value per year in maintenance. So that's going to be just shy of like $800 a month. Water, utilities, heat, that'll come up to anywhere between $300 to $500 a month. And property taxes here in BC specifically are about 0.05% of the purchase price. So on $1 million property, they're about $5,000 a year. You can do that math, divide it by 12, or pay it on an annual basis because you definitely have the opportunity to. We just broke through the traffic, so let me give you the final piece. Now that you know what it takes to buy this $1 million home, let me tell you the process so you can go from start to finish, from pre-approval to keys with clarity. The first step is, of course, going to be a pre-approval. You're going to want to get a pre-approval from a mortgage broker. At that point, they're going to tell you that, yes, go ahead, put an offer in on your new home. You qualify for it, no problem getting that approval. Once you have that pre-approval, you're going to need to talk to a realtor. The realtor is going to help find the property of your dreams. They're going to help you write your offer and subsequently get that offer accepted with great terms and conditions. Once you have that accepted offer, you go back to the mortgage broker. The broker will get you the full approval. Submit the file to the lender and you will get that formal approval. The formal approval will likely come with a few conditions of approval. At that point, the broker will have most of them, like your letter of employment, pay stubs, if you're self-employed, T1s to NOAs, maybe T5s, all the slips, void check, the whole 9 yards. The broker may be asking you for a couple more things at that point. Send those things into your broker and then the broker will get your file broker complete. Once the file is broker complete, the lender will send this file to your chosen lawyer, at which point the lawyer will be given a set of instructions. Things like confirming your identity, registering the necessary things on title, just a couple lawyer things. But once the lawyer has cleared their instructions, the file becomes clear to close, at which point you're just waiting to get your keys. I want to mention as well that when you put an offer in on a property, it's generally going to get accepted with a time period for conditions. A big one of these conditions is the financing conditions period. That's the time period that I'm going to operate within to get you the broker complete status on your file. But that's also going to be a time period where you're going to set up home insurance and do the ample due diligence on the property. Get an inspection, review title with your realtor, the whole 9 yards. So there's going to be a few steps that you're going to want to take to make sure you're doing your utmost due diligence on purchasing this property. This is why it's super important to align yourself with amazing professionals, a good mortgage broker, a good lawyer, a good realtor, all people that will help guide you through this process with ease, stress-free, making sure that you're doing your due diligence at every single step. And also people that are looking out in your best interest. I don't expect you to know anything about mortgage intricacies. You shouldn't have to know the intricacies about buying a home, and you definitely shouldn't have to know the intricacies behind real estate law. That's what each one of these professionals is here to help you with. You know, also with the home inspection, appraisal, home insurance, we each have our own discipline and we each will guide you through this process with ease. That's our job. So if you're serious about buying $1 million home, the worst thing you can do is wing it. Know the numbers, understand the costs, and surround yourself with pros that have done this before. Don't just dream big, plan smart, and don't be a statistic. Be informed, be proactive. I'm Ennio with Next Gen Mortgages, and if you found this video helpful, hit that subscribe button. You know, if you want to connect, go to my website, nextgenmortgages.ca, or visit me on Instagram to find my call booking link. I would also love to hear from you in the comments. What's your biggest concern when buying a house? What's the thing you're most unsure about? Drop it down below. But with that being said, I hope you have a great day. Win the day, win the week. Don't be a statistic. See you in the next one.